Welcome to The Explainer. Sometimes to really understand the big picture, you've got to zoom way in. So today, we're going to do just that. We're going to break down a single, really chaotic day in business news, Wednesday, October 29th, 2025, because it tells you pretty much everything you need to know about our economy right now. And it's a story of two very different futures, happening at the exact same time. So the day kicked off with what seemed like some good news for millions of people, a move that was supposed to make life a little bit cheaper. But then, this one sentence, this pretty stark warning from Jerome Powell, the most powerful man in finance, sent a total shockwave through the markets and just completely changed the story of the day. Okay, let's dive into this, because what the Federal Reserve did was huge, but the message they sent was, well, anything but clear. It was a classic case of giving with one hand and then kind of taking away with the other. So, as pretty much everyone expected, the Fed cut its benchmark interest rate by 1/4 point. Now, this is the rate that influences everything from your mortgage to your credit card. The whole point? Make borrowing cheaper, give the economy a little more juice. And this was the second time they'd done it this year. And at first, Wall Street went wild for it. All the major indexes shot up to new all-time highs right after the announcement. But that party, yeah, it did not last long. As soon as Chairman Powell started talking and basically poured cold water on the idea of more cuts coming soon, the celebration was over and the markets tumbled. And what's really fascinating here is you can see just how divided the Fed itself is. The vote was 10-2, but get this, look at the two people who voted no. One member, a dove, that's someone who usually wants lower rates to help the economy grow, he wanted a bigger cut. And another member, a hawk, who's more worried about inflation, he wanted no cut at all. This split just perfectly captures the huge uncertainty that our economic leaders are dealing with. All right, so while the Fed is sending out all these confusing, mixed signals, there's another part of the economy that isn't confused at all. Nope. In fact, it's absolutely firing on all cylinders, hitting a milestone that just a few years ago was completely unthinkable. On this very same day, the AI chip maker NVIDIA became the first company in history to reach a mind-bending $5 trillion valuation. Just let that sink in. That's a 5 with 12 zeros. It's just a testament to the absolute investor mania that's surrounding AI right now. And look, this is so much bigger than just one company. What we're seeing is a full-blown AI gold rush. There's massive investment and just sky-high expectations for growth across all of big tech. Just take a look at the sheer scale of the money here. We're talking tens of billions of dollars being poured into AI infrastructure by Microsoft, Meta, and Alphabet. These companies aren't just dabbling in AI. They are betting their entire futures on it. And right now, investors are rewarding them big time. But at the exact same moment that all this incredible AI wealth was being created, a completely different and frankly, a much tougher story was unfolding for thousands of American workers in more traditional industries. On Wednesday morning, you get this news. General Motors announced it was laying off more than 1,700 workers at its electric vehicle and battery plants. The reason? Slower than expected demand for EVs. The very same day, the new media giant Paramount started cutting 1,000 jobs. It's part of a big restructuring after a merger, and they're expected to let go of 2,000 people in total just to cut costs. And all of this came right on the heels of another big announcement, this time from Target, which had just finished its largest round of layoffs in a decade, cutting 1,800 corporate jobs. So you've got three huge, well-known companies, and on the surface, three different reasons for the layoffs. But really, they all point to the same thing: serious challenges and painful changes happening in the core parts of the tangible, real economy. So how do we square this? How do these two completely opposite economic stories, this incredible AI boom on one side and this painful real-world squeeze on the other, how do they even connect? Well, the answer really lies with the American consumer, and more specifically, how the Fed's decision to cut interest rates could actually make a problem we call the generational wealth gap even wider. Okay, so here's the crucial point. When the Fed cuts rates, it generally makes things like stocks and real estate more valuable. And who owns most of those assets? Well, it's typically wealthier, often older households. So they get the biggest boost, while anyone who's just trying to save cash in the bank actually sees lower returns. And you can see it right here in the data. Since the start of 2020, the financial assets of the top 0.1% have grown by over 91%. That's nearly double the 46% growth seen by the entire bottom half of the population. The gap isn't just wide, it is getting wider, and fast. And that financial pressure is exactly what companies serving mainstream America, companies like Target, are desperately trying to figure out right now. They can see that their customers are getting squeezed. With their sales flat for 4 years straight and shoppers cutting back, Target's incoming CEO is basically staking his whole career on getting that Target magic back, that perfect mix of style and value, to try and lure cautious consumers back into the stores to buy more than just the bare essentials. So, after all of that, after this one single wild day of news, what's the big takeaway? What does it all mean when you put the pieces together? What we're looking at is a snapshot of an economy in a really profound state of transition. It's defined by this huge disconnect between a hyper-accelerating digital future and a much more challenging real-world present. So on one hand, you've got this futuristic tech boom creating wealth at a pace we have literally never seen before. And at the exact same time, you have a really difficult reality for traditional industries. And caught right in the middle of this collision course, you have the Fed trying to steer the ship and the average American consumer just trying to stay afloat. And that leaves us with the critical question of our time, a question that all the events of this one day just put into sharp focus. Is this AI boom going to be a rising tide that eventually lifts all boats, or are we watching the creation of two separate economies just drifting further and further apart?